Hello to everyone. Welcome to Fintech Garden Weekly Harvest Review. I'm Dumitru Condrea and my co-host.
I'm Igor Tomych and I'm CEO of DashDevs.
And today, as usual, we'll provide you free, fresh news from Fintech world that happened in the last week. First news, well, it happened a little bit earlier than the last 7 days. It happened on 1st of April, and it was not a joke. Mastercard and Visa, they just changed some rules on the market. First of all, Visa changed the threshold for chargebacks. We know that in fintech world, we have a lot of issues with chargebacks. Users, most of the time, they just forget where they're spending money, when they're spending money. They forget to turn off some recurring payments. Well, sometimes it's good for the business, but most of the times it generates some questions from users who start to raise some disputes. And it's good when you just have time to solve this before it become a chargeback. The majority part, almost 50% of the chargebacks, are just happening only because people forgot where they spent the money. This is a direct hit for Visa and Mastercard revenue, so they decided to just cut this and to fight against chargebacks. So first thing Visa did, 1st of April, the threshold for chargebacks is minimized from 2.2% to 1.5%. And these changes are affecting different merchants around the world.
From another angle, you can take a look. That means that Visa and Mastercard, they're trying to optimize the OpEx, because if you think about the chargebacks, it's the part of operations and something which lead into those networks to lose money. And instead of bulking up the technology or doing something on their side, I think they squeeze in what is possible from the OpEx to have better numbers for 2026, because with the macroeconomics, the world is going in some kind of recession, and handling the OpEx and trying to optimize the operations is kind of the key for the networks.
I will not agree with you totally, because we have situations when you have not only to implement some technical things, but also to enhance some rules. For example, Visa and Mastercard, they have developed a lot of interesting platforms and tools and instruments for merchants, acquirers to manage this. There is VIRB, there is Etoka, there is Verify, a lot of things that are on the market. But the issue is that customers, sometimes when they open a transaction, they don't see in descriptor all the information they need. They just see a super strange descriptor, and sometimes it's just only the name of the entity can be, which is totally different from the brand, for example, of a store. And this is why they are requesting currently that all the payment service providers to show for each transaction all kind of details like address of virtual or physical terminal, telephone number of a merchant, the name of a merchant, like legal name and the brand. So sometimes such kind of actions can possibly help. I tend to agree with you in some part of your affirmation that this cannot help till the end with solving the issue, but at least it will be a tentative for all the merchants, all the PSPs, acquirers to be more cautious with this. At the same time, Mastercard are changing totally differently the landscape. They are just adding another 9 cents per transaction for so-called transactions submitted without a prior approved authorization. This is specifically designated for United States market, not for European one. So Mastercard for European remains the same as it is. But the Mastercard also changed some policies and processes and documentation for disputes. Basically, both of them, they try to fight against the fraud in the same time. And fraud is quite unfortunately very, very much present in fintech and in payments.
That's definitely true, but I would like to bring the topic that we discussed with you as a Netflix, because Netflix in overall has more than 1.5% of the chargebacks. And I think that shows by decreasing those numbers, it's not just providing the tag, it's even potentially hurting some legal business which is running. So most of the users, if they will see the descriptor of the Netflix, I think they will understand it's Netflix. But then putting the cap on top of the percentage of the chargeback, it's a big move. And I think that will put some pressure on the merchants and acquirers, even on the legal business.
Fortunately, Netflix has the capacity to speak directly with Visa and Mastercard and to change it to some rules. I know that Visa is implementing some white lists also, so possibly the situation will change. But yeah, with small merchants, situation can be just destructive. Let's see what will happen in the market. Exists precedents when Visa and Mastercard roll out something and then roll back because they understand that the market's not reacting positively.
Let's move to the second news, and it's about Monzo, because Monzo is exiting United States market. And since they got the full retail banking license in European Union, they focus into bulk up or even get more clients into the existing markets. And it shows that times like that, even the big fintechs, they have doubts about the United States market. What do you think about that?
Well, this is quite logical for Monzo. They have to take into consideration now they want to expand on foreign markets or having a banking license. They just received a banking license. Maybe it's time to focus on Europe and UK. I mean, continental Europe. This is a great news for them, having a banking license and in Europe. And this means that they have to invest a lot of efforts, a lot of money, all the focus has to be here. Plus, Monzo, unfortunately, they tried a lot into the US market to enter, to provide some services. Unfortunately, things are not so well going there as they have in Europe. So it's better to do it now, to take this harsh decision now when it's not too late, and to focus all their forces and money and capacities here in Europe.
As we discussed before, I think on the market, we see two strategies. Like Revolut, despite not having the license, full banking license in United Kingdom, it pushed them to start operations overseas. They experimented with the wallets in Singapore. They're actually doing the banking in the United States. So a lot of banks, if they're limited, they kind of focusing on the overseas and strategies for entering new markets. And with the Monzo, I think we will see if it will play out well, because the market penetration for the digital bank in the European Union and United Kingdom is pretty big, like everyone having one or even more digital bank applications and accounts with them. And let's see if there will be enough space and possibility to actually be a fruitful company with the European market in this move.
Revolut, and Monzo, they did the same. Monzo took a look on other markets when they didn't have any kind of a banking license. Now they have a banking license, they tested the American market, they understood that's quite hard for them or whatever, and they just decided to roll back from US. So they basically did as Revolut, but in the moment when they received the banking license, they changed the strategy. So I think that both of the strategies are similar, just the post-licensing activities are just different. Anyways, let's see what will happen with Monzo, because an American bank, if we are speaking about American banks, there is a big American bank that just declared a very interesting thing this week. So Lloyds declared that they have found a very good weapon against the money mules. So basically, they just declared that with help of quantum computing, they can now find out very quickly the money mules and they can just fight against them. I have a feeling that this can be just some kind of a marketing step or just a PR thing. Igor, what do you think about this?
Since my master's degree in information security and part of the quantum computing was in my lectures, I think sometimes people are missing the instruments and the results that you can have with that. Because in this case, Lloyd is highlighting that it's actually based on quantum computing. And I think it's the wrong way to approach it, because an issue usually with the understanding how the specific dark market or fraudsters are working. And it's not about quantum computing, because quantum computing is not some kind of AI tool which will give you an idea what is going on. Yes, it's a useful tool for the specific operations, especially if we're talking about cryptography, like finding the prime numbers and a lot of other functionalities in math. But I think here it's more marketing buzz and trying to jump maybe into the news with this statement, which I doubt really heavily will affect how they're doing the fraud detection, because we don't have mass market quantum computing. Whatever we have right now is kind of simulations, and the simulations are not effective. And the second step, we don't have proper math engines to fully utilize quantum computing to put them into algorithm for finding the fraudsters. So each layer, when I dig with this news, it's kind of amusing, because it's gives more questions rather than answers. But let's see if we will hear anything about quantum computing fraud detection in upcoming months or years.
Igor, I just want to read the specific press release that Lloyds made. They say that the experiment tested multiple quantum algorithms to see whether patterns of known money mule behavior could be identified with a larger transactional graph. The team used anonymized data on one of IBM's 156-qubit quantum computers. So basically what they did, they just tested some algorithms to see if they can find the patterns. So the quantum algorithms, of course. And seems like they have this possibility because they did this together with IBM, and possibly we just don't know that something appeared on the market.
That's a good statement. And I really like that they testing and they put in proper testing, because it's not just about testing some anonymized data set, because in the practice, you have a lot of real-time data. You have to have storage. You have to have everything to be wired with the quantum computing and then calculated. It's kind of far from real-life usage, because a few weeks back, I was on merchant payment ecosystem and everyone was saying, when are we talking about AI? Is it in your P&L? So maybe the good tested criteria for using the fraud detection, it would be show us how much money you saved by detecting the fraudsters via quantum computing. And at this point, if there is a significant amount of money saved and fraud detections are achieved with that, I will be agreeing that it works.
Well, to be very honest, we don't need a lot of quantum capabilities or AI capabilities to find out big money mules. Because, pardon my frankness, but a lot of mules are collaborating with officials. And sometimes, because a lot of things you cannot do with just, go out of control. So sometimes, instead of investing in AI, you just have to look who is in the government or in some specific authorities or regulators. And possibly it's just, you need just some good detectives who will find out. Because finding the key person who takes care about this from the regulators inside or from authorities inside, you just can find the entire network around the globe. But yeah, quantum computing is good. Seems like a lot of investments will be in this side of the field for next decade.
Thank you. It was really great news today. Thank you for joining us and listening. Please comment. Please let us know what you like and what potentially you would like to hear from us. And we're looking forward to see you the next episode.
Have a nice weekend and wish you a lot of good things to happen this time. Bye-bye.